The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, Money Masters and Treasure Hunters. Excuse me. Welcome to the January 9th, wonderful Wednesday edition of today's Opening Bell on The Trader's Edge. And yes, I am your host, Steve Rhodes. May sound a little bit different, but that is because on Sunday afternoon, I went on that instant weight loss program. Don't recommend that anybody else go on it. It is called food poisoning, 15 hours solid. And so the throat is a little bit raw out here, but I am grateful to be back here with you. I will just be with you here for the first hour today, 9 to 10. And then we will probably go ahead and replay this hour here just as I get back in the saddle. But it's really all about the throat here. That is the problem. So thanks so much for joining me, folks, and allowing me to struggle through this. So we'll just see how this here goes. It's really what's kept me out of the seat here for the last couple of days, just simply not being able to really speak too much. So this is the most speaking that I will have done since Sunday early afternoon. Anyways, let's go take a look at the markets out here. Let me give you a feel for where I think we are at and where we're going and why. So we're going to start off now, folks. If you are listening on the radio or listening in on your mobile device by using tfnn.mobi, don't forget you can always catch the archive of this show on Channel 9. That way you'll be able to take a look at my charts here. You'll be able to see what it is specifically that we are looking at. And always you can catch this show live, even streaming live on your mobile device. Just go to the homepage of tfnn.com. You'll see the smartphone little tab over on the right-hand side. Just click on that, and you'll be able to see this show streaming live. Don't forget, if you want to see these shows in high definition, just go and join our Tiger's Den out there. You'll be able to see these charts very clear with the numbers and everything. So we're going to start off here, folks. Normally we start off taking a look at the futures market, but let me lay out for you what I did and what I have done for my clients here. Normally I send out my newsletters in the morning, but not sure just exactly how I'd be feeling here in the mornings. I've been sending them out in the evening with updates in the morning if we needed. And so nothing has really changed since I took a look at the markets the way that we closed last night. So we're going to start off here, take a look at the NDX 100. Why? We're going to take a look at both weakness and strength, because from weakness and from strength is where you can really gauge what is going on inside the markets, as well as cycles that are out there. So we're going to take a look at weakness. We're going to take a look at divergence. We're going to take a look at cycles, and I'm going to show you what it is that it looks to me where my educated guess is what the charts are telling me what is likely to occur. Now, right now, as we talk, the futures are up. The Dow futures up about 35 points. ES Mini's up 3 across the board, or across the pond over in Europe. You've got the DAX is up 22. FTSE's up big, up 0.7%, up 45 points. Over in Asia last night, the Nikkei closed up 70 points. The Shanghai pretty much unchanged, down 62 cents, and the Hang Seng up 107. So we're starting with the NDX 100. What the NDX 100 here, because this has been the weak link in the chain, mostly led by Apple, but Google's not exactly helping out here either. But if we do take a look at the NDX 100, we had the big strong day, big strong gap up on January 2nd. And on January 2nd, when they created this open window, which is also referred to as a gap. And yes, eventually those gaps get filled. But gaps, folks, can actually be your friends, especially as you get some tests. And what has happened here in the NDX 100 is that gap, the bottom of that gap in the NDX is 27.1630. You can see that the bottom of that gap was tested on the 4th and failed, was on, and both on lighter volume as well as price. Did the same thing on January 7th. Got down to a low, certainly of 27.01, but closed out at 27.24, and the same thing yesterday. So the bears here have had all kinds of opportunity to get down there, try to close that gap, but the bulls, okay, that is truly it's not the true candle of a bull separating line out there, but that is a line drawn in the sand that has acted as support. Now, can it be busted? Absolutely. Will it be busted? Absolutely. Is it going to be busted today? I don't think so. Is it going to be busted tomorrow, Thursday? No, I don't think so. Friday? Maybe. Monday? Maybe. But Friday or Monday, folks, is really what you should be looking for. I expect we're going to see the markets here try to move up, couldn't bust them down, and now it's going to try to go ahead and bust them up. So that's why we see the futures moving up here. But when you take a look at weakness, when you start off with the NDX 100, couldn't bust it down, you've got a pretty good, you've got a darn good support line, which is the low of January the 2nd out there. And again, that low is a 27.1630. Bullish or bearish, what you're looking for is if you get a close below 27.1630, that is when you can say, all right, now it's time to go start closing the gap. Otherwise, you've got a pretty decent support line. And if you just simply go over and take a look at the Qs, this is where it's important to be taking a look at the index. In my opinion, really is take a look at the futures market first, then the index, and then the actual ETF behind it, because the index is going to give you the better picture. I think the futures market's going to give you the best picture overall. But in the Q's case here, still also doing the same thing. Now, what's going to help you is if you take a look at the Q, is going to really help you to understand the volume difference that we have out here, because the Qs here gap up on January 2nd, 70 million shares. It's got really two of the strongest candles that you can have out here, starting obviously with December 31st and the follow through on January 2nd. So you got 70 million shares. Excuse me, the Qs try to come back in there January 4th, 34 million shares. He tried again on the 7th out there, 27 million shares, and then yesterday, 28 million shares. Not even close to enough to bust it down. Now, yesterday, the Qs did close 1 penny. They closed at 66.52. The low of the Qs of that window is actually 66.48. So it actually closed just above it. Okay, I guess I was wrong there. In any event, still want to be paying attention to the actual index versus the actual Qs out there. So again, what you can see here is you've got a strong area of support. Now, so we've got that laid out with regard to the weakness that is out here. Now, let me show you some additional weakness. And this is something that, I've shared with you. Nobody else, to my knowledge, really has shared this with you. And this is the important thing, because now we're going to go take a look at GE, General Electric. I don't remember if it's 27, 28, or 29 in the Dow 30 out here. But one of the things that you can take a look at if you're watching on TigerTV, and this is real key here. And, as I take a look at these markets, I take a look at some of these divergence. I really do believe, even though I usually keep, when I do my shows here, I don't really share everything that I do inside my newsletter service. So my clients are, I'm here to protect everybody. But when I take a look at some of these divergences out here, it looks to me, based on past history, that things are setting up for a really big fall here. And so that's why I want to make sure I come out here and I share this with you. If you take a look at GE's been the general. It's really a leader. And what it is, it's a leader on the way down. It doesn't have enough of a weighting structure inside the Dow to actually pull the market down or, quite frankly, pull the market up. But what GE does is it gives us a great leading indicator of divergence. And you go back here and you can take a look. If we're back in the 2011 time frame, July of 2000, you can go back as far as you want. And what you take a look at on the top of my chart here is the actual chart of GE, and on the bottom is the Dow. Now, when you see GE moving down and the Dow either moving sideways to up, it is a real good indication that you are going to see a significant correction, probably even more than a significant correction out here. So along the top chart here, you can see the declines in here in GE, and always leads the Dow down. So it's a leading indicator. It's an advanced warning. It's a tsunami warning. It is as a major warning as you possibly can get out here based upon the chart patterns that we have seen out here in the past. And what you can see here going on right now, if you look on the upper right-hand side, I'll go ahead and blow this up on the screen because it's clear as a bell. It's clear as day out here. You can see you've got GE on the downside, leading things to the downside where you've had the Dow moving up. Now, is this going to give you a timing tool? Absolutely not. It's not a timing tool, but folks, it is an absolute tsunami warning out there. Is it a guarantee? No, there's no guarantees in life. Even when you go have a meal at a fine restaurant, there's still no guarantee that you're not going to end up with a quick weight loss pill out there. Things do happen out here. But what you can do is this is all really about probability and money management here. Probabilities right now are showing you what's going on with regard to weakness. Now, why do I say we're taking a look at Friday or Monday out here? Just all depends on how much you believe in what goes on outside of our universe or inside our universe or up in the stars, up in the skies out there. Because starting tomorrow we've got the moon at perigee. That's when it is actually closest to us. That typically is not necessarily a fuse to light things up, but we could see a high come in here tomorrow. On Friday, we've got a lunar phase called moon conjunction Pluto out here. I'm going to show you a chart on that. So that is on Friday. We've also got the new moon coming in on Friday. On Sunday, we've got a celestial aspect, Venus square Uranus. That is proven in 2012, the single best reversal indicator out there. Whether that worked or not, you'll see as we take a look at a chart here. It certainly identified a market turn. Now, if the market was moving down, it identified a market bottom out here. In this case here, we don't have the markets moving down into these aspects. Instead, we've got the markets moving up. And on Monday, you've got a 16 planetary index date. Out of 300 years, I've done studies, folks, for 300 years, 1800 to 2100. A 16 planetary index date happens about 0.8% out there. So that we've got a lot of things going on in the sky. We've got a number of leading indicators here giving us an indication as to what's going on. If you want to take a look at, here's another divergence out here. I'll go ahead and put this up here. Here is the S&P 500. Now this screen here, I was only able to get this thing as large as I can. This is taking a look at the S&P 500 up in the upper part of the chart here. This is the actual price of the S&P 500, but this is taking a look at the McClellan oscillators out there, the summation index out there, and you can see the red lines here on the way down. You've got divergence, folks. You've got price moving up, all of the oscillators angling down, just like we took a look at GE, folks. That right there, that is a leading indicator of not just a small correction. That's a leading indicator of a fairly large correction about to happen to the S&P 500. We're going to go take a look at strength when we come back, because the New York Stock Exchange doesn't say the same thing out there. 877-927-6648. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and will be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week, with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back, folks. In the pre-markets here, moving to the upside, you've got Nuvasiv Inc. Closed out at 1576. They're trading right now at 1780. Seagate Technologies, STX, they closed at 31.39. They're trading out at $32. Facebook is up a bit. They closed at 29.06. They are trading out at 29.65 to the downside. Apple closing out at 5.25, trading down $4 right now at 5.21. Apollo Group, APOL, closed at 20.94. They're trading down at 19.15. And Anheuser-Busch, Bud, BUD, they are trading out at 23.04. They closed 84.66. Had that wrong there. They closed out at 86.29. So let's go back to the markets here before the open. I'll give you take a look at the divergence that you've got here now from the strength standpoint. In the strength standpoint, what you're going to focus on really is the New York Stock Exchange as well as the Russell 2000. Those have been the two big dogs out there, the leaders. They've given you no bearish signs really whatsoever. Yesterday was the closest to a test of the actual breakout day. That session being that January 2nd. The January 2nd low there is, what is it here, 85.7108. Got down yesterday to a low of 85.73. So a couple of bucks just above it. Still couldn't get down there and test it. From a signal standpoint, the signal with regard to going short is likely going to come from the strength side of the marketplace. You're going to see some type of reversal pattern or candle out here. I suspect we'll see the markets try to push up higher. That means on the New York Stock Exchange, probably a test of the January 4th high out there, 86.74 over the course of the next couple of days out here. And quite frankly, and if you do get it closed below the low of January 2nd, you start getting inside that gap. That may, in fact, also be a signal out here. But you got to take things one a day at a time until you get a close inside that gap. And this is the New York Stock Exchange, so it's the overall breadth of the market. It's not the S&P 500, which is absolutely, as we take a look at divergence out there, that's setting up and telling us that that thing wants to move down. We know that the NASDAQ, which has been weak, certainly led by Apple and others out there, we know how weak that is, so that's telling us that that wants lower price. So we got the S&P telling us, we've got the NASDAQ telling us, and we've got the Dow. If you just take a look at the general versus the Dow out there and a leading indicator. So you got basically three of the big kahunas out here, and now what you're waiting for is really the NASDAQ and the Russell 2000 to go ahead and join that party. So the first place that you're going to be taking a look at is that gap up on January 2nd, the low of that, but most likely what you're looking for is some type of candle reversal signal, and the bears just simply have not shown up inside the New York Stock Exchange. If we go take a look at the Russell, let's just switch over here into the ETFs. We'll take a look at the IWM. So the IWM, you can see the strength there, the gap up on January 2nd, 116 million shares. You know, yesterday was a rejection of the highest, I believe, of that day. Let's see. The high of January 2nd out here, 86.91. Now, I didn't really totally reject the high. 86.85 was the close. 116 million shares. However, yesterday, only 23 million shares. Not enough volume, not even close. Has not tested the low of that gap. So you don't have that necessarily as a support area. But what you can still see here is actually the strength. Now, what would you be looking for? Well, if you take a look at all of these things, folks, all these indexes, or most of the indexes, certainly the IWM, if I go back over to the indexes here, the biggest bearish case, if you're a bull out here, and what this is creating here is a huge island. Don't know if it's going to create an island reversal or not, but if it does, and what I mean by that, folks, is that if you get, in this case here, if you take a look at the chart, if you get an open below 85.71, it's not going to be today, clearly, tomorrow, Friday, Monday, you get a close below it, and intraday, it never trades up to the 85.7108, that would be your bearish signal. That would be your time to get out of Dodge, because island reversals, folks, those are about the biggest both bottoming and topping patterns that you can have out here. New York Stock Exchange, last time that it had an island reversal, were the lows put in here on June 4th. You can see these lows here, which was made up of the June 1st, the June 4th, and the June 5th candle out there. That was your island reversal bottom. Do you think the same thing might happen at the top? I don't know whether it will or not. I know what to look for. I know what I'm suggesting that you look for as well out here, and it's going to come from this area here. It's going to come from strength. Now, just like I did with the S&P, we took a look at price, as well as we took a look at the McClellan oscillators out there. We'll go ahead and put the New York Stock Exchange. Same thing here, even though you're seeing it in smaller footprint, smaller fashion out here. What you can see is you can see price movement up. That's the upper right-hand quadrant. And you can also see all the oscillators have also turned up. So until we start to see divergence there, or we start to get some other candle signal, the New York Stock Exchange is not giving us the same type of indication. That's really where I believe it's going to come from. I believe what we're going to find is, because we already know weak is weak out here. So now what we need is the strength in the marketplace to also go along to the downside, or just go ahead and lift all boats out there. But so far, it'll have to turn GE around big time. It'll have to turn all the McClellan oscillators up big time as well in the S&P 500. And Apple's going to have to reject lows and decide to move higher. 877-927-6648. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 40 points, S&P up 4. Composite up 8, small caps up 3. Leading the charge, the upside, global payments up $2.94. It's up 6%. GPN is their ticker symbol. Visa right behind them up 2.25%, up 1.5%. You've got Amazon up $1.53. Nuvasiv up $1.77. Hologic up about $1.50. Boeing up $1.28. Western Digital up $1 to the downside. Apple leading the charge here this morning to the downside, off $4, about 0.8%. Anheuser-Busch down $1.88, 2%. Apollo Group off 8%. APOL is their ticker symbol. PNC Financial off 1.5%. Crosstex Energy, XTEX, off 6% out here. Let's go back and take a look at the chart here of the Venus. We're going to take a look at some of the celestial aspects that are going on in the sky, beginning really tomorrow, but we're going to be taking a look at Friday and Monday, because I believe that is when we are likely to see the turn date. Don't ask me why. I'm not an astrologer. All I do is I plot these things on charts and look for probability of turns, see if there gives us a increased probability. That's all I am looking for out here. And so if we start off with Venus, the Venus-Uranus aspects out here, we have one of those coming in on Sunday. Comes in on Sunday. You don't know whether the high is going to be put in on Friday or it's going to be put in on Monday. So, you're looking for other patterns out there, tests of swing points, A to B equals CD patterns, whatever it might be. But as you take a look at this chart here on the screen, you can see certainly the S&P, it's up towards the upper level of the relative strength indicator. So you got prices rising. That's very clear to be able to see. If you take a look at on the chart here, go back on the April 9, 2012 time frame, you can see price was moving down. Big wide-ranging bar, quite frankly, as it was moving down the trading session before. That bar on the way down on April the 10th out there, wide-ranging bar on the way down. That was no way a reversal signal at all, but the Uranus, I should probably say, probably makes a whole lot more sense. Went ahead and identified a market turn. Same thing out here back in June. Same thing out here back in July. As far as how long-lasting they are, you just have to, once they're just simply the fuse, the trigger to go ahead and change things, change the course of direction, or for whatever reason, they have the ability to go ahead and identify a market high or a market low. So you can see the January 19th time frame out here as the market was moving up. Went ahead and identified a reversal. That reversal lasted all the way down into the lows of December 31st out there. Of course, December 31st was a full moon that came in. So on Sunday, you've got the next Venus Uranus cycle that is out there. If we take a look at full moon, new moon cycles out here, as I was driving in this morning, it was early in the hours, and you can see that new moon just getting ready to come into play out here. You can see, now this chart here, this is what I do for my clients. I identify all of the new moon and full moons, but what I've identified, and you can actually see on this chart, is how long the actual cycle lasts. And what I do, folks, is I actually use the exact day instead of giving it leverage on one side or the other. When the actual event comes in this case here, whether it's a new moon or full moon, and how long, including both the day of and the day 2, you see a market change from low to high or high to low out here. In this case here, if we go ahead and we blow this up, we can see the last cycle 2 come in, and the new moon and full moons had really gotten off kilter, but maybe they are back on kilter because December 31st certainly marked the low out here in this cycle. And I'd have to move this over just a tad here as I blow things up or move things down. It gets a little bit off out here. But you can see the full moon cycle came in, and that was a good fuse to identify a market reversal. So you've got the new moon, I should say, coming in on Friday. So another lunar cycle as the market is moving up into it. That's why I suspect we will see the market move up into Friday. And if volume, quite frankly, ends up being about average, no real follow-through based on the December 31st effect. If we go back and take a look at where we're at in price, it's not a whole lot different from when we had Mario Draghi and we had Ben Bernanke coming out with QE3. We're really not that far away. We haven't done a whole lot since that time frame. And my impression here is that what we're really dealing with here is more likely a blow-off top than anything else in the marketplace. But each day, you take things one day at a time. That's really what it is that you're doing here. You're going out and you're going and plotting these events on your chart to see if you can come up with some kind of pattern or probability out here. So you've got that lunar cycle. You've got this moon conjunct Pluto. Now, this cycle here has worked really well in 2012 as well at being able to identify market turns. Doesn't matter whether it was a high or a low out there. So with the market, in fact, the last high out here was on October the 20th when you had also a moon conjunct Pluto. The actual high was put in here on the 18th, and the 19th was a move down. So it identified a market reversal there. I suspect that is what we're going to see here with that next phase coming in. So that is on what is going on up in the skies. That is my take on what it is that we see here in the market. So hopefully that gives you a real clear indication as to what is going on out there. Now, if we go take a look at some of these stocks here that are popping and dropping as we do on a normal basis, let's go over and take a look at some of the stocks in the Dow. Let's go take a look at the leader in the Dow out here. This probably is going to be, and we're taking a look at IBM right now. As we take a look at IBM, you take a look at this little black line going across my screen here. That's area of resistance out here. The Dow here. What IBM did yesterday, so it gave you a little bit of a reversal signal as well, I believe. We take a look at the gap up. So again, we're looking at January 2nd. The case of IBM actually came down. Let's see if it actually tested the top of that December 31st area. We'll go ahead and use a red line across the top of that. The high of IBM on December 31st was 191.68. Yesterday gets down to 191.60. So it did test that. Tested with 3 million shares going against 4.6 million shares. Now, when I was showing you the gaps here on the Qs, showing you the gaps on the NDX, that was testing the actual, we'll call the top of the gap, meaning the bottom of the candle where you had the gap up. In this case here, and that acts as a support area. This also is a support area, coming down and still testing. The window is still open, at least from my standpoint, with regard to it being a support area. So in order for IBM to break through, now it's only been a test once with regard to IBM, but you can see as it came down into that area, tested it with lighter volume. Maybe it tested a couple more times. You get a couple more tests of that area and it holds, it becomes a strong area of support out here. So what you're looking for as a bearish sign or a bullish sign, either way, for the bulls and the bears, it couldn't get easier from a technical couldn't get easier from a technical charting standpoint because of these gaps out here, because of the volumes out here. It makes it a whole lot easier to understand who is going to actually be in control of the market, the bulls or the bears out here. So IBM rejected that area on lighter volume yesterday. Right now, what it's likely going to do is move up into the swing point of January 2nd out here. May only have to get up to the 193.80. That's the low of that area, or go up and actually test the highs, which would be in the 195-ish, 196-ish range. That is on IBM. Let's go take a look. These are the top 9 holdings inside the Dow. Let's go take a look and see what anything else is going on here. Let's take a look at UTX. Let's take a look at ExxonMobil. Let's see what ExxonMobil, because of its weighting structure, just simply inside of the energy market out here. So if we take a look at, we're going to take a look at the gaps as well, because this is where you're going to be getting information released from you. So here we're going to take a look at the bottom of the January 2nd gap. We'll go ahead and put a red line across the bottom of that screen. You can see ExxonMobil gapping up with 16 million shares. As you came down and tested it yesterday, 14 million shares. Still not enough to bust it down. So just simply consolidating at these highs here. Also, with regard to trying to test a swing point high, let's see what it did. ExxonMobil was really going after 12, 12, 12. That was a great concert out there. That candle had 15 million shares in essence as ExxonMobil got up there on the January 4th. Not enough volume to break it up. Gets up there with 11.5 million shares. So you can see just simply trading sideways here, but right now it does have one tested area of that gap out there. See what other gaps I can see quickly here on the charts. Let's take a look at Chevron, CVX, the ticker symbol. Then we'll go take a look at some of these stocks here that are popping and dropping, see what they're actually doing. If we take a look at, get rid of this on the screen here, and Chevron is the number 2 weighting structure with 6% weighting inside the Dow out here. So as we take a look at Chevron, this thing here has not even been able to get down and test the bottom of the gap, meaning the January 2nd level. Moved up with 6 million shares. Yesterday pulled back with 6 million shares. So it's starting to get a little bit of energy to the downside, but the low of that gap is 108.74. Still has not been tested out there. Let's take a quick peek here at Apple. You can't not take a look at Apple. So Apple moving down. Most likely Apple here, what we're going to see it do is it should at least first test the low of January 7th out there. That price point is 515.20. But I suspect what it really wants to do is get back down in here and test the December 31st level, more likely at the 509. It's trading inside that candle. That was last time we showed, the entire market showed all of the bulls came out there. That was the running of the bulls on December 31st out there. That's got volume of 23 million shares. So far, as Apple's pulled back down in there, it's done it on lighter volume. 17 million shares on the 7th. Yesterday, 16 million shares. Not enough energy to bust it down. So you can expect another area of this very strong support level inside IBM. That's that hammer candle on November 6th. That's the bullish engulfing candle on December 7th out there. Respectively, those have 45 and 27 million shares out there. So Apple's going to need a whole heck of a lot more energy to work its way down. If you do trade intraday, you certainly want to be paying attention to the intraday charts on Apple. And right now what you can see here is Apple getting into the oversold area. Just simply, this is a 5-minute chart that we're looking at. Last time Apple got down there was back in the January 7 time frame. Gets into oversold, has to work that condition off. It's going to work it off one of two ways, preferably not the way that I worked off my condition on Sunday afternoon and Monday early in the wee morning hours out there. In this case here, it's either going to travel sideways or move a little bit higher out here. So expect, you can look right now, Apple's trying to set up a little bullish engulfing candle as it's worked its way into that oversold territory. It's really reading the message of the markets, folks. It is not that difficult. It is not, especially not that difficult on a intraday basis out there. All you need to do is a few indicators, understand some of the candles, understand the candles that are out there, because that is always the message of what is going on between the bulls and the bears out there. And if you'd like to understand that, how to read that message, I think it's probably, I know it's the best investment you could make in yourself. That means you'd be making an investment in others, those in your family. Go to the homepage of TFNN.com, click on my name. It'll take you to my page. You'll see my newsletter service there, but you'll also see two incredible workshops that you can take, and one is candlestick charting, and you'll want to take that one first. Then you can take a look at buying and selling the D point out there, and it'll help you. It doesn't matter whether you trade, whether you're in a longer-term investor, a shorter-term trader out here, but if you're not getting all of your potential, which you can get, then just sit back for a while and just learn these techniques out here, because they work. They work so much more often than not that it just simply puts the odds in your favor out here, and you want to be able to use them, and they work on a continuous basis. It doesn't matter, if you trade the futures contracts, you can watch it do it all the time out here. Take a look at the futures as they come careening down into the 11:30 time frame on the 8th. That was yesterday out here. So you got the futures moving down. We're taking a look at the ES mini. It moves on down, creates a morning star candle out here, reversal signal as it moves into, and this is a 10-minute chart that we're taking a look at, as it moves into the oversold territory. So you got the bulls and the bears. You clearly see who's taking control. You see you're moving into an area where it's got to be worked off. And what does it do? It runs back up to the level of its most recent swing points. You got swing points up here at 6:50 in the morning on January 8th. You got this little swing point up here at 9:50 in the morning on January 8th, which held as a resistance level. That's what's being tested here right now. As you can see, the ES Mini moving into the overbought territory. Now you got to wait for a bearish candle. So if you're long, all you're doing is you're just simply adjusting your stops, and go ahead as soon as you see that reversal signal, you see some follow through, you can flip positions and go to the other side, or just take your ball home with the cash inside it and do something else for the day out here. So you can watch how these things work on a consistent basis out here. That's really what each of us do here at TFN, is give you so many tools in order to be able to read the markets, and we want you to certainly take those to your advantage. Let's go take a look at some of these stocks here now that are popping and dropping. Finally, I'm going to get to it. Maybe bloviating a little bit too much here. Let's go take a look at Interactive. What is this? ININ. Interactive something or other. I believe it was a IBD stock, and I probably should know what it is, but ININ. It is up 17% this morning. I'm trying to see if there's some news on it. Sees revenue estimates so above average, and this thing is now taking off with some volume. So let's go see what this is going to move into. If it's moving in, there we go. So we're going to let's go ahead and put this back on a longer-term chart first. We'll start with the weekly to see what it is doing. The weekly chart says it wants to go out after this little resistance area, which is up really in about the $40.66 range out here. Right now, trading out at $38.98. If we just put that line across the screen here, we can see this is the line of resistance. It's been tested couple of times out here. The last time was the week of July 29th at 1.3 million shares. So far in the first 2 trading days, 98,000 shares. Of course, it's got some nice volume today as it moves up into that area. Also taking out a B point of an A to B equals CD, trying to do it on a weekly basis. That's the April 20th area. Dow's up 55, S&P's up 4. Thanks for putting up with my voice, folks. We'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's up 65 points right now. S&P's up 5. You've got King Dollar up 25 ticks. Gold back $4. Silver down about 27 cents, about 0.8% off. Light sweet crude up 39 ticks right now. As we take a look at bonds here, they're trading up just slightly here out at 145.07. As we take a look at bonds here, you know, if you're playing the bounce here in bond, what you want to do is you want to be cautious as bonds make it up to the open gap out here, which is the January 2nd candle. So just the opposite of what we've been looking at here this morning as we took a look at the indexes, as we took a look at the ETFs out here. So you should see bonds start to struggle as they get in that January 2nd level, that high out there, 146.1 out there. You can see here bonds also, as they were making a move lower, if you just simply take a look at the relative weakness, we'll call it, it's the relative strength indicator, but certainly as it got down towards the bottom, also giving an indication that they were overbought and they needed to work that area off. Of course, as it's worked that area off, hasn't seen a tremendous amount of volume to the upside here. So, that's what you've got going on in bonds. If we take a look at the gold here, so we'll take a look at gold, see what it's done. It's made one of my favorite candles out there, one of your favorite candles as well, I hope. That's the hammer candle on January 4th as gold was moving lower, moving back into that 1-to-1, A to B equals CD down. So you had a nice little hammer candle that formed there. Of course, as you take a look at gold, that following session, that follow-through session on the 7th out there, not much of a follow-through, was more to the downside than anything else, and kind of negating the hammer that you had out here. What gold is doing, it's giving you a long-term bearish mode out here. This is just simply using a 20 and a 50-day exponential moving average out here. These are lagging indicators in the marketplace, but, you can put these on your charts and you can see what happens when you see these crossovers. And right now you've had a crossover with the 20 moving through the 50-day. That is a bearish signal. You know that gold here, as you take a look at it, getting into oversold condition, has had to work that off. Not really showing you any kind of a strength here. In fact, it's below the midpoint level. Gold hasn't been able to get above the midpoint level of relative strength since November 28th, 2012. That, folks, it's telling you something. It's telling you a ton out there just by utilizing some of these tools out here in the marketplace. Take a look at silver. Silver actually looks even worse, in my opinion, than gold does. Silver still traveling, and it's a technique I showed you last week. Taking a look at this candle here, really from December the 20th. Whichever way silver busts outside of this is going to be a continuation pattern, either to the upside or to the downside. Everything right now, to me, points to the downside. If we take a look at the currency market here, we take a look at the Japanese yen, U.S. dollar, Japanese yen. Looks like it may have put in a top. Of course, we know this thing got into extreme overbought condition as we moved into that January 4th time frame. Got a little bit of a movement down over the last 2 trading sessions. You got Abe, I think is his name out there, Abe out there, Abe, saying that he still wants to weaken the yen out here. We'll see if, and that's what's putting some strength inside the U.S. dollar index. If we go down and take a look at the 30-minute chart, though, of the yen out here, let me go ahead and put the relative strength up here. I don't know why it wasn't up there. What you can see here is the yen now moving in towards where? Moving in towards that overbought territory. What you can see is, and no bearish candles yet here. But as you take a look at, I'll go ahead and pull this 30-minute chart back here. I've got about 10 seconds or so. As the yen here in previous, as it was moving off of its lows, got up into these overbought conditions, into the extreme overbought conditions, it was making higher highs. And what we can see here right now, it's not doing that anymore. It's actually making a lower high out there. I expect that we will see the Japanese yen here turn down. If you take a look at retracement levels, come from the high so far down to the low, and you can see as it got down to low, got into oversold conditions. Now it's at the sweet 618. Stay tuned for Basil Chapman, folks. Great to be back with you. Look forward to seeing you tomorrow. Have a great day. Take care, folks.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.